Lachlan has been a success as a share trader, helping clients to build their wealth through stock markets around the world. Sharewise, the company he's involved with, has a team of 24 with a vision to perform. Lachlan, first of all, thanks for joining us. And I just want to firstly ask, what is the single biggest challenge that you're currently facing in your business or investments, and how are you addressing it?
Well, Luke, thank you for having me on. Initially, it comes down to volatility. The market has been very much a narrative-driven regime at the moment. It's been whipsawed from left and right. You have Trump coming out with tweets here and there that are just having macro ripple effects throughout. So it's the sort of thing where it's been a very volatile market, but with volatility, there's opportunity. And that's what we want to be taking advantage of. So how do we address it? We basically make sure we're brainstorming with scenarios. So if we're prepared for the worst, we can't be surprised. And that means we're going to be making the right decision when it is crucial. And that comes down to communications daily with our investment teams, with our other advisors around, leaning on all of our experience, and most of all being disciplined in our risk management. If something does come as a bit of a shock and stirs the pot a little bit, at least we know that, okay, we're managing risk in the right dynamic to protect our clients.
Yeah, risk is a big thing. Would you say these tweets that Trump sends or others get out into the market, I guess Elon Musk won't, is it a case of it being fun or concerning for you?
I see it as a bit of both. I see it as fun because I do enjoy the more or less the narrative that they're spinning sometimes. But it also can be concerning because it makes manipulation. If one person can be manipulated into saying something and it's going to have effect across the market, that's a lot of risk. Especially if there's one person saying this thing and people are piling a lot of money into those sort of investments. So it's a bit of both, but for us at the moment, it's providing opportunity, and we play in that opportunity.
Yeah, absolutely. I guess, like you said, it's a risk factor that you just need to factor in on an ongoing basis. Lachlan, what's the one challenge that's changed everything in business and investing for you personally?
Yeah, well, basically, the big challenge that we've seen and we've navigated through was COVID. That changed a lot about the market in general, of how people invest, how they manage risk, how quickly things can turn, and that's in a negative and positive way. So it really showed that being in our eyes and how we manage risk here, which is being active, that if you're being inactive, it's going to be costing you a couple of 100,000, or you're missing out on opportunities to make a couple of 100,000. And these are what we're always looking to be doing, being active in the market. So it really showed me how you got to be disciplined with your risk approach, even when the news and the articles are telling you, buyer beware, this is the worst you're going to see it. The absolute bottom of COVID, that we had peak data of COVID cases. It was ridiculous. And then we had a V-shaped recovery. The Fed stepped in and they started stimulating the economy, and ultimately the new era of investing is very much similar to this. We're finding that you've got to have a active risk management strategy to be managing all this volatility. If not, you're going to be just bouncing left to right, not knowing where to go. And further to the point before about Trump and his tweets, for example, little stuff like that, just creating more volatility in the market, is just creating uncertainty for some investors.
Yeah, I guess, like there's emotions that run strong right across different types of investors. Some will just panic at the drop of a hat once
Yeah.
that tweet goes out. Others kind of sit back and they've been there for the long term. Like how are you playing out that with, the group of investors that you work with?
With a bit of a short-term and long-term scope, in the sense that if there's opportunities to be getting into a stock or an investment that we believe that could do really well in the short term, absolutely we'll jump into it. That's opportunity cost, but still having that steady state structure of setting up for the longer term goal. I believe at the moment, For example, you can't go wrong with infrastructure. It's not going to go anywhere. But at the same time, you want to get into a growth opportunity for infrastructure going forward, not just something that's just going to stagnate. There's nothing wrong with that, but it's just opportunity cost. So it's taking advantage of that at key times, and that's our big thing. We want to be timing. Timing. That's a big
I
one.
love the growth aspect, and I know we've talked about that a lot. And I'm going for growth
Yeah.
is a big one. And like manage your risk, go for growth, and that's how I play it out. And a lot of commentary between us is around that aspect, and pulling back the reins on the conservative ideas and the risk management is a good way. And this is the kind of the type of people you want to partner with. Someone like Lachlan, who if you're going for that growth, that you are actually pulling back. Lachlan, what do you look for in a business or investing partner before committing with them?
So for me, it's I got to know that they're resilient. I got to know that they're reliable, and that there's candid chats between us. Communication's a big thing. If for especially for let's say an investing partner, if we can't have an open discussion and be candid with each other, then we're never going to be able to get down to the root cause of achieving our goals. If you're unable to rely on them and basically come down to a trust in their decision, it's always going to be a very much stirring of the pot moment when things do get hard, because the market's never going to be just simple sailing, especially with how the market's been at the moment. It's been really good, but people were tested during March when these tariffs came in. A lot of relationships were tested, but like the relationship I had with my clients, they trusted in our abilities. We were candid. We had communication, and ultimately we were able to give clear, concise advice at the right time, move into a bit more cash, increase our gold position, and ultimately, when the day came where everything looked to reverse, go back in, go heavy, and buy all those opportunities that we saw completely undervalued.
Yeah.
So that's the biggest thing for us.
Yeah, this is a great one. I love this question, especially for you. But how are you identifying and evaluating emerging trends or opportunities to stay ahead of the curve?
Yeah, yeah. I think people always know this. Like identifying trends is done the best by learning from the past. Like as people already know this, I feel like they do, but they don't spend time in looking into it in more detail. The simple fact is, when we look at things, we break it down from a larger scope down to a smaller scope. So, we go macro, we look at US, China, Europe, Australia, we see where is our funding, where's our investing going into. There's been a lot into AI at the moment. Obviously, that's a big talking point. There's been a lot into gold over the last 9 months. Central banks are buying gold. It's no secret, but what is the big market makers? Where are they investing quite a bit into? So it's, China's buying a lot of gold. Central banks are buying a lot of gold. I'm still hearing on the street that they want to be buying a lot more gold. It's just, and that's hence why the price has been going up.
Crazy. Remember those lineups at Martin Place in Sydney of people
Yeah,
lining up to buy gold? Just absolutely crazy that
ridiculous.
see that
Yeah,
happen, that it hasn't got that long before it's going to drop
yeah,
because of the FOMO factor, right? And I guess you play a little bit around that scope when you're looking at those opportunities or risks around the market.
yeah, absolutely, absolutely. And then, like, we look at things like that, but then we go to break it down again. Like, we break it down to a sector, break it down into a stock, and look into an opportunity individually on that stock. You can always buy a stock, but are you buying it at the right time? A stock can always be overvalued or undervalued at any point, and no one has a crystal ball. We're only always having the expectation that things are going to go well. If things don't, how are you going to manage risk? So it's definitely taking the larger scope and breaking it down. I like to look up to Ray Dalio, who's a fund manager. He has a few books which I very much align a lot of my thoughts with as well. I think he's got a great scope on the market, and he talks about the economic machine of debt cycles and changing world orders, and his theories and thesis at the moment look to be playing out.
Yeah.
And these are the sort of things where he's managing billions.
Yeah.
He's smart money. You want to be following smart money, and a simple example at the moment would be, let's say, the grid constraints on AI. Everyone's talking about AI and going for that, which is excellent. I think AI is going to be huge, but where's the transformers? Where's the switch gears? Where is the permitting software for it? Who controls that? That's your picks and shovels. Then you go to your platforms. Where are your data centers? Who owns the land for that data centers?
Yeah.
Your specialized REITs, your interconnect connections, like who's running all the pipeline, who's doing the fit outs of these. And then obviously the cycle of, okay, where are they getting their energy from? How are they going to be supplying the energy for these data centers going forward? So that's breaking it from the macro down, and that's how you stay ahead of the curve, by looking at it outside the box.
Lachlan, what are 3 actionable items that you would recommend listeners do in the next 90 days?
If they're looking to start investing or getting into a scope, the biggest thing I find people do is they don't set themselves a goal. Your number one thing is you got to set yourself a goal. You got to establish an outcome, what risk you're willing to take, and the process of how you're going to undertake that. If you don't set those goals initially, you don't know what you're striving for. Everyone's going to be happy with a result, but a result is very, very fluid. A result could be negative, a result could be positive. You have to have a set result, and then be disciplined with your risk. So if you set yourself a parameter, stick to it. Write it down. I will not do this. I will not do this. I want this in place. And once you've done that, finally journal, measure. If you find that you were wrong about something, why were you wrong? I've got a book that I journal with all our sort of trades, and I write down what was I thinking at the point. Was it, if I was nervous, what was I nervous about? Why was I nervous about it? And I had to break it down into rational thoughts. That is, without a doubt, setting a goal, writing rules for yourself, and then measuring that over the next 90 days.
Fantastic, Lachlan. Thanks for joining us today to give your insights and that playbook about how you deal with clients, how you've worked yourself, and what steps you put in place. So thanks for coming on.
Beautiful. Thank you, Luke. Thank you for your time.